And right now, as we do each and every Tuesday and Thursday at 30 past the hour, we're going to talk to our man Tim Ord. You can reach Tim at his website, folks, ord-oracle.com. You see our man Tim Ord right there, as well as the past results right on that website. Check it out. And then under the services tab, right at TFNN.com, folks, he's got two outstanding webinars, The Secret Science of Market Tops, How to Identify Market Tops, and the 6 Secret Ratios Every Trader Should Know. Tim Ord, good afternoon.
So, shall we start?
So I'm going to hand it off to you if that's all right, Tim. I talked to you, folks. I got to jet out for an appointment early. Tim is kind enough. He's going to take over, and he's going to walk you through the slides as he always does. I got to jet out early. Tim, I appreciate it, man. I know the listeners, the viewers, they're looking forward to it, and I'm going to listen to it when I'm in the car running to my appointment. I appreciate it, man, okay? It's all yours, brother.
All right. Thank you. All right.
Thanks.
Let's begin. So, this is the daily SPY. Over the last couple of days, if you notice, we did close above the upper Bollinger Band actually 3 days in a row, yesterday, day before, and the day before. And I outlined the other times that has happened. This another time, actually, I drew them in red circles. And usually you get a short-term pullback. You know, sometimes it's just a day, sometimes it's a week. That's what kind of lead bearish. But also, I had two different things going on. I'm only bearish for the short term. I think the market's going to still keep hitting higher highs. But over the, couple of days, I'm actually getting kind of bullish signs right now. But Fridays are usually the best days to trade because they make you sweat over the weekend and find out if you made a right decision come Monday or you didn't make a right decision. But anyhow, on a short-term basis, I'm still out of the market. I'm not long. I should be long. I got a couple of signals back in September that I should have took, and I kind of waited too long, and they got away from me. But anyhow, on a short-term basis here, we did close above the upper Bollinger Bands 3 days in a row, and the last 2 days, that's yesterday and day before, the S&Ps were up, and also the VIX was up. Okay, that's a very short-term sign. And you should get a pullback. Well, today we're starting to pull back. I did this chart earlier. We're actually lower right now. But ideally, I like to get into the support area, give or take around the 670 level. Might be a little bit less than that, might be a little more than that, but that anywhere in that vicinity where I have outlined in pink there, or shaded in pink, are other times when the trend got above 1.2, and they all occurred right around that 670 level. The last times before, we had some back in lower levels in that 645 range, and actually back here in August we had looks like about 635 range. So anyhow, once you have panic, in other words, trend closes above 1.2 or higher, and you get a couple or 3 or 4 or 5 trend readings of 1.2 or higher in a specific area, that area turns support. As you go back into that area, normally you get panic again. And I think that's what's going to happen here. Can we get back down to 670? I don't know. Hopefully, yes, that would actually add to support if we do, because chances are we'll get a trend reading above 1.2 in that vicinity, and that'd be a great buy setup. I'm still neutral for right now. This is a little bit less fuzzy picture, but you can see here and here and here, we're above the upper Bollinger Band. And you can actually see now that this is the VIX, the bottom window is the VIX. We had 2 days up in a row. The VIX is also up in a row. Here, if you notice today, we're down. I did this earlier. We're actually down lower now. But the VIX was also down. So that's bullish. If the market's going up, the VIX is going up, that's bearish. If the market's going down, the VIX is actually going down also. That's bullish. Can you get a couple of days of that? Maybe. But I'm looking to long to get in this vicinity here. This is that range where the trend reached panic. So we got another percent to get, 1.5% to get in that range. So that's what I'm looking for a bullish setup. Also, going back to chart 1, we're up 5 days in a row. I made a big outline there, up 5 days in a row. 5 days up in a row, predict the market will be higher within 5 days, 83 or 82% of the time. So we were up 5 days in a row going into yesterday. Now we get at most 5 days down, maybe less. I'm thinking less. Probably tomorrow could be a bottom. If we keep going down, but that's the reason why I want to get along the market here. Up 5 days in a row is 82% chance you'll be higher within 5 days. There's nothing to bet against, I guess. So anyhow, that's why I'm looking for the S&Ps, and hopefully we get down to that 670. So, all right, that's the S&Ps. Let's flip over to the gold market. Okay, gold market is starting a massive rally. Actually started in actually last year in August. Had some signals back in August 2024. They gave some longer term buy signals. Those longer term buy signals have turned into reality. So what's going on now? This chart goes back to there it is, 2006, and what it is it's a bullish percent index for the gold miners index / GDX. So it's another ratio. So I put an RSI on this ratio. I used a 10-period RSI, which is basically a 2-week RSI instead of a 14-period RSI. And I marked all the times the RSI got below 25. We're at 19.44 right now on this RSI. And then I drew lines down from the times when the RSI got below 25. And the bottom window is the weekly GDX. So this is a GDX chart. So this is a weekly RSI. So it takes quite a bit of acceleration to get either up or down to get an RSI below 25 or get an RSI above 70. 70s are bearish. Anything below minus 25 is bullish. And so all the red lines going back are the times when the RSI got below 25, which we're, again, right now we're at 19.44. So we're looking at some sort of a worthwhile low in this vicinity. It usually works pretty well. Sometimes they go down a little bit more, but most times they're picking out the bottoms really well. Even back in the rallies of 2008 up to that 2011 high. So we'll come back to this chart. So I'll wait. I'll be here. All right, welcome back, folks. I'm Tim Ord. I'll be your host today, and you can find me at www.ord-oracle.com. So let's look at this chart. We were talking about this chart when we left, and anyhow, the RSI hit 19.44. Anything below minus 25 is bullish. This chart goes back to 2006, not counting the current time. But other times this has happened was 11 times. We had one failure in 2013, and that was a vicious bear market. But all the other times it's worked. If you do that, if you work out that percentages, in other words, these signals are about 91. They actually are 91% accurate. So we're at some sort of a low in this vicinity. Chances are is 91%. So. Do these things take off right away? Well, most do. This one in 2000 went sideways, or 2015 went sideways until January 2016 before it took off. This one here looked like it went kind of sideways for a spell. This one is basically right smack at the lows. This one went sideways for a spell. But anyhow, worst case scenario, we're at a low. We may flip sideways, but it is a low of a worthwhile low, I'll put it that way. So we're kind of bullish on a short-term basis. So let's look at some other charts here to expect what's going on. To keep showing this chart in the past, it's pretty rare. The data only goes back to 2010, but we had two other times when this indicator, which is a bottom window, which is the 50-day average of the up-down volume for GDX. Previous times it got up around 30. this time around it's got around 32, but I think both other times are around 27 area, give or take. I think this was a little over 28. But anyhow, it identified upsurges in the market, even though we did pull back from basically 84 to 70. This indicator, if you notice, is still staying high. We're coming in right now at 27, pretty much where this high occurred back in 2016 and pretty close to 2019. So we're still very strong in the market. So I'm thinking we may flip sideways a little bit here, but in general, I still expect this market to actually keep moving higher. Moving higher before the year's out, it's a possibility. We got 2 months to go. It's hard to say how long consolidation's going to last. Sometimes they're short-term last, a couple of weeks, sometimes a couple of months. But previous times of this signal, they only have 2 other times. One lasted 5 months before the rally started to consolidate. This one rallied for another whole year, and that was including the pullback of the COVID crash of 2020. But so it looks bullish, and we're not actually pulling back here. We're staying relatively high. This indicator reached, I think, about mid-September, and now we're a good month and a half later, and this indicator is still staying high. What that says is a lot of gold stocks are still doing very well. And I've been saying that these major gold stocks, really the ones that have ran up since last August, are now consolidating. And those are the big ones. Newmont Mining's, AEM, all of those are starting to consolidate. CDE, that's a silver stock. But now they have huge run-ups. They are consolidating. So what's going to go next? Excuse me, let me get a drink here of water. So anyhow, gold market's still strong. So on a short-term basis, here's maybe what's being played out. If you notice here, we closed above the upper Bollinger Band. I just wanted to point that out. And if you notice, you usually go into consolidation. And here we pulled all the way back down to the lower Bollinger Band, which is actually a bullish sign. We closed below the Bollinger Band on October 27th. This is a daily, and we rallied up, drew a bullish engulfing there. We're kind of following around right now, but we had a 3-gap play to the downside, which is a candlestick pattern that predicts once the third gap is formed, the market will go back up and test the first gap. Well, the first gap came in around 84. So I think we're going to find support in a couple of different indicators. You remember this is giving a buy signal. And so 3-gap play, third gap down. So I think 70 is probably it to the downside in that vicinity. We rally up to 84. And what from 84, I don't know. We may go back down to 70 again, but ultimately at some point we're going to keep going higher. So how do you play this? Well, I'm long, not ideally, I'm long in the 75 range in GDX. I'm going to see what happens up around this 84 range. There we go. Up this 84 range. We test that gap on lighter volume. I may, we'll see how it goes. Right now, I'm staying long GDX. Will it be a longer term play? It could. Depends how volume goes on this next rally. So we'll have to be watching that, and we'll keep you posted on what's going on. But bigger trends up. A couple of things I want to point out is how to pick stocks. And I brought this up on Tuesday's show. And basically, volume momentum are the two most important things in the stock market. You want to have volume going in the direction of the momentum, and you want momentum to be up. You don't want momentum to be down and have volume go up, because that's just going to whip in the whipsaw. What I want to point out here is this is the Bell Sun Mining, or Belo, BELO, Sun Mining. This is a monthly chart. It's the Bollinger Bands. If you notice right there, it got real narrow. Right in that vicinity. The market was going sideways. And finally, it had a big surge in volume. If you notice, this volume's way higher compared to the the months. This is a monthly chart before it. So that's a sign of strength off of a low. And that's how do you get a bicycle. Has to have a sign of strength off of low and has to close above the mid-Bollinger Band. Once you close above the mid-Bollinger Band, that turns the mid-Bollinger Band up. That means in general, momentum is up on the monthly time frame. And that's the perfect scenario for a market to rally yet. So anyhow, this was a buy signal back in, I don't know, it looks like November, December of 2024. And you got the buy signal about a nickel. Right now we're up around 20 cents. So that's up, I don't know, 400% thereabouts. But anyhow, that's how that works. Just another one to point out. This is another, RIOTO, which is another, I think it's a silver stock. You got one back in 2020. There's a big jump in volume, higher than, you know, several months before it. You close above the mid-Bollinger Band, there's the music. So we'll get into a couple more stocks towards the end of the show here. I'll be here. Come back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back. I'm Tim Ord, your host today. You can find me at tim-oracle.com. That's Tim at ord-oracle.com. So let's keep going forward here. This is how to pick the gold stocks, I guess. So anyhow, as we said before, this is back in 2020. This is our Rio 2 Limited. I think it's Canadian stock, but they do have a symbol for the American stock too. But anyhow, I'll give a buy signal. You had a sign of strength through the mid-Bollinger Band on a monthly chart. Here, if you notice, gigantic volume through the mid-Bollinger Band. That's your buy signal. So in general, it looks like about 40 cents, their take. The buy signal came. This is Canadian. We're up around 227 as of today. So that's 500%, 5.5%. So anyhow, so let's look on. So these buy signals are gone. So are they good buys? No, they were good buys back in December of 2000. This one looks like about December 2023. So let's look bring them up. So what's going now? So what I'm thinking is going to happen over the next several years, or actually at least several months, if not longer, a lot of these gold stocks that haven't done anything for quite some time are going to come to the forefront. And I picked out two. There's a lot more out there. And, this is a monthly chart of West Haven Corporation. This is a symbol for the New York Stock Exchange. I guess we're gone now. This is a buy signal, and this is West Haven too. So anyhow, this is a buy signal worth looking at. So thank you for listening, and tune in again next Tuesday. That's when I'll be on next. Thank you.